Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, April 26, 2019. I wanted to get a video out to you guys. There's just kind of a lot of things I'm seeing that I think are pretty important right now. You know, for weeks and weeks and weeks, we've been in the doldrums, slow grind, nothing new to report. And although there's not anything earth-moving to report today, I think we could be here ready to finally get a nice some swing tradable action here in the market is what I'm trying to say, and not just on the broad markets, quite a few things. So let's start out with the broad markets. Of course, that's what everybody's interested in. This is the SPY, and the SPY broke down. There's the uptrend line off the December 24th lows. Clean uptrend line. We broke down last Wednesday, the 17th. Hit this minor support 283, 288.83, danced on it for a few days, made a perfect back test, a second perfect back test of the trend line from below, and we've rolled over since. Not impulsively, so you want to see this level go, at least on the SPY. However, you know, you also want to see the other things break down as well, namely tech and QQQ. The Dow broke down on Thursday, and then yesterday, that is, followed through today. So you can see a very clear breakdown. Here's the uptrend line off the 24. Same story, negative divergence, rising wedge. This also speaks more to the economy than does QQQ. QQQ is very tech heavy, but the Dow, these are your Dow 30, bellwether industrial companies in the U.S. And you can see that breakdown right there, a follow through today. So by all accounts, that's a breakdown of objective short entry. However, what's holding the market up and what we need to see go as well is tech and tech and QQQ. So the Qs right now, just like last week, they're or that was actually this Monday, they're starting to crack intraday below that trend line. Nothing impulsive yet. That's not that impulsive. It's a decent drop, 0.70 as I'm doing this video. I think we're primed and ready to go. I'm just going to say that now. I want to get this video out. I'm going to show you right now the chart of the NQ futures, and that will be your sell signal. And so it may be go time by the time you're watching this video. If you want some targets, let me just tell you right now, rough targets here. Let's see. Yeah, they're about the same. Let's just use this chart here. I think we'll go right on through the high. This was the breakout to highs in the NAS and the Qs, roughly 187.86. I think we'll pass go. Don't collect $200. Whatever that thing in Monopoly is, just go right on through there. This would be my minimum targets. You're talking about a 3%, maybe a little better than a 3% pullback to about 183.33. And so there's two ways to look at this, I think. And again, I'll get to the NQ chart in a minute, see if we have a sell signal yet. There's a couple ways to play this. Either if we get a confirmed breakdown, a move down here, again, that would be a minimum target. And I'd have to zero that in. It might be a little bit lower than that. You know what? Let's come down here. Yeah, that's where I want it, right there, about 182.88. That's not an adjusted target. You want to cover a little bit above that. And so you're talking, again, I think it's about 3% or so from where we're at, if I can grab where we're at there. Yeah, but a little over 3%. And so this would be a quick pullback trade. And you remember, the economy is far from falling apart. In fact, GDP was very strong today. And I'll talk on that again in a second here when we go forward on the euro, US dollar. I think that changes things. And you might say for the better, but I don't know. I think it's going to change the dot plot for the Fed for sure. So we'll talk on that in just a second when I get to currencies and everything else. But that would be your quick trade. And here's a bullish scenario. So for those that believe the economy is strong, GDP was strong today, some things are rolling over. Housing is where I'm watching the most. One of the things I'm watching very closely, I should say. So there's your bullish scenario. So that's your quick pullback trade, longs that want to buy a dip. And there's a couple ways to do this. You could try to swing that. If you leverage it up, you can, 3.5% gains, not bad, especially if it's a quick trade. And I'd put a pretty good degree of confidence on there. If that level breaks, we're going to hit that. So that's one thing. And if you can keep a relatively tight stop. Now the other thing is, this may very well be, and nothing's wavered in my outlook on the markets. There's a very decent chance that this is just simply a kickback rally in a new bear market. It doesn't matter to me that QQQ has popped a new high. So some of the major indexes didn't, a lot of them didn't at all, like the small caps, mid caps. The Dow failed to make new highs. SPY, I don't know if SPX, I think it technically popped it, but I don't know if we've had a close. To me, it doesn't matter. That would just be a simple double top there. So, again, you look at, you're talking mere fractions of a percentage term in new highs. And again, this is not the market. QQQ is not a very balanced and diversified index, so you want to look at the other ones. Again, so where I'm going with this is, if you think there's that possibility, then you can either, instead of going for the single here, this would be batting a single, a double would be this target here, which I think is still very, very possible as well, about 176.50 or so. So there's your double. Here's your triple right here. And if you want to go for the home run, and it starts to play out, you get a pretty big red candle. Let's say we go down here, then we put a big red candle on the weekly, and it looks pretty bearish. You can just set your stop, lower it down to break even, maybe trail it down along the way, and go for the home run or the grand slam, which says that we are going to undercut these lows at some point here in 2019 and go a lot lower. The probability on that right now is pretty low. My cone of certainty is pretty wide, but it's a possibility. And again, that would be the big trade. And to do it, you just have to ride out some counter trend bounces along the way. And again, if you get an entry and you're profitable, then what you have to struggle with is in swing trade, if we are going to just pull back here or here and bounce, you might be able to nail the exit, because those are pretty well-defined support levels. I think we'll get reactions there. I'll tell you one thing to look for. If we just smash through those levels like they're not even there, these two levels, that's a tell for me. So I'm getting ahead of myself. The market may not even break down today. It may continue higher, or it may break down, a little whipsaw signal coming. Maybe the QQQ wants to backtest if it breaks down. But I just wanted to kind of lay out in advance things that I look for that will tell the character of this market. If the dips don't get bought at where they should, then that would be indicative that we may be in the early stages of the next leg down of a much bigger drop that's going to go, and some people talk about a test of those lows. I think most people have given up on that by now, but I haven't. I don't think we'll test them. Like I said, I've been saying all along, I think if we get even close, we're going to go right down through them. So that's my thoughts. XLK. We do have tech breaking down today. So intraday, just had a price alert fire off on another monitor, and that's that. So there's a breakdown. You want an early signal. Let's look at the NQ. Let's look at the futures real quick. Here's the NQ. This will kind of give you a heads up. This is a very clean uptrend line. It's off the lows on December 24th. There it is. Lots of reactions. You can see every now and then you get a little brief whipsaw signal, like right here we had a little pop below. Maybe that's what this is, but based on the nature of the wedge, if this puppy's going to break, this is where it's going to do it. You get down here and the wedge starts contracting, you have the divergences. It would be ideal to see it happen today or early next week. Doesn't have to happen, but that's what you want to look for. You want to see a big red candle down through there. I think I covered DIA, the Dow. If I didn't, there it is. Again, Dow broke down yesterday. More follow through today, another red candle. I mean, this is a clear breakdown. And again, it's just tech holding the market up almost single-handedly now. We have breakdowns on, the more diversified indexes right there. So that's it. We just need that NQ. And when it comes, I think it'll look like this. If you were in the trading room yesterday, I posted a chart of crude oil. Let me put that over here, drag that from another monitor. Trade setup, trade idea, actually an actionable trade. Crude had broken down. I was watching crude closely on the intraday charts, the 1 minute charts, 2 minute charts, as well as this trend line here. So right when it broke this trend line, I fired it off as a swing trade idea with a minimum target down here to 64.78, and said that I'd be covering, took a oversized day trade size position to cover half there, and then let the other half ride. I think there's a lot more downside. So what I'm getting at here is I think this is what it looks like when you have an extended run. And keep in mind that crude oil and stock market have been running very tightly correlated. So now we have a pretty impulsive breakdown in crude. And what it did, once it took that level out, I mean, I fired that post off, and within, minutes, it started just waterfalling, big red candle, and that's what it looks like, and that's what we'll probably see in NQ when it breaks, if it breaks today or next week, whenever that is. And you can see we just kept going. So perfect tag. We hit that 164.78 level. We flagged right on it. You can see there was a consolidation which took the shape of a bear flag continuation pattern. There's your flagpole, and then boom, next thrust down. So at this point, and I'm covering this as well as a trade idea, and I did post an update in the trading room today. You have the next objective short entries would be on either, here's a trend line here, a back test of this trend line, and or that 64.78 level right there, because that was a pretty significant support level. We just went right through it after a little flagging action there. Or if we continue down, I'd prefer to see some consolidation here first. So my next target 63.14, because it'd be a little bit stretched, but remember, crude's a trendy sucker. When it breaks one way or another, it can keep running. So for the time being, I plan to sit tight on the swing position, even if we consolidate or bounce here. And we'll see. If the broad markets break down, all the better for this crude short. And at that point, I'll be looking at one of these two targets, or I'll probably turn my focus more so out to the daily charts, because that's the beauty of this. The charts are stacked right now. I'm watching the 60-minute chart here as I'm showing you on CL crude futures. But when you look at, let's go to USO, because I know a lot of you guys trade the ETNs instead of futures. Here's that beautiful little wedge uptrend line in USO. Same thing. Not by coincidence, you have a trend line off the lows on the 24th, just like the stock market, because there's a tight correlation here. One breaks, the other is going to break more than likely. So crude is just very overbought at resistance. I mean, everything, I've covered this recently, I don't want to go into too much detail. It's made a 61.8 retracement of the entire move down. That's a key Fibonacci level. Failed there after a brief pop above it. There's also resistance, as you can see. If I draw a line right here, look at all these reactions there. So just a nice short trade opportunity for crude oil here. And again, I'll try to get out some targets, maybe an official trade on this, but if unless I do, you short it with a stop somewhat above the highs, I think the risk reward is just very good. I just see minimal upside right now in the broad markets and crude oil. So maybe sounds a little, I don't know what the word, unprofessional, but I'm just not afraid at this point to be short. I'm not seeing where buy signals or sell signals are pending, but the risk reward has been unfavorable to be long for a while, and now it's starting to actually be favorable to be short. In other words, I don't see a blow off top coming at this point. And if it does, that's what stops are for. They're just set them just slightly above where you were, or the recent highs, and hey, maybe a blow off top does come. So that's that. There's crude, and I already showed you my targets on TLT. Am kicking myself for not, I even marked up a chart with targets and said it in the videos and trading room that I really liked it here. And you know what? Again, if you took it, great, and it still looks good. This is TLT, the 30-year bond ETF, 20 to 30-year bonds. And you guys know my snare. I've covered that recently. Everything that I like to see, the PPO turning up at right above the zero line, keeping the trend bullish. And again, I'm favoring a move up here to about that 128.55 level. Best to set your target a little shy of that. And just to confirm that, we can look at the bond futures. This is a 30-year long bond futures right here. And ZB is a symbol. When you're on, this is, I'm on investing.com here. They use the symbol US, but if you're trading these, and I don't know why they don't use the actual ticker symbols, ZB are long bond futures. There it is. Just a beautiful, clean, bullish falling wedge pattern, just like you had a bearish rising wedge pattern here, or at least an uptrend line with a divergent high, negative divergence. Same thing in reverse. there are no guarantees in trading, but uh, these are the things you want to look for. So, and this just recently broke out. So, very, very likely or possible that this can, have quite work its way up here in time. And again, this aligns, and I've said it recently, a rise in these treasury bonds would correlate with a correction in the stock market, most likely, because you get a flight to safety bid in treasury bonds. So TLT or ZV should rise if the markets and tech break down soon. Here's another idea, but I'm beating myself up for not getting this out. I started to even mark up the chart last week or earlier this week. I had a nice trend line here, divergence, everything else. What you're looking at, by the way, guys, sorry, is this is Bitcoin futures. That's my trading proxy. I don't even know how to buy Bitcoin on, or nor do I trust any of those non-regulated exchanges. So yeah, I like to just trade the futures. And you had this nice uptrend line right here, and it broke down. And Bitcoin's had a heck of a run. I pointed out two bullish opportunities earlier in the year here, and one other one, and Bitcoin ran. But it's just a bear market rally, and so I think the bear market rally at least ended here. That was about, I think, a 7% drop. It's kicked back. Not the most objective entry now. That would have been right here on the short. So again, my apologies for not getting out there. I even put up a chart. Started to pull GBTC, I think it is. There's an ETF type vehicle that trades, but I just want to point that out. And there's also, you can see here, I had a slightly upward sloping trend line, but there's quite a bit of resistance there on Bitcoin that comes in there. So it's a pretty formidable level for Bitcoin. It did take out this downtrend line, but there's resistance. And anyways, a short-term trade. And where does it go from here? I don't know. Let's move off it. I'll try to follow up. Maybe look at some of the proxies for trading Bitcoin, like some of the stocks that have exposure to cyber currency trading platforms and things like that. I'll take a look at those soon. Last but not least, and this all kind of ties into the bigger picture, and they're probably contingent on each other, is I'm still very much ready and may even start to, personally, maybe officially on the site, start to ease back into gold here. The euro has just been getting pummeled against the dollar. Dollar's rallying, but as I tell you, I continue to monitor this bullish falling wedge pattern. And what happened today is GDP came in hot. If you're not familiar, gross domestic product, the numbers came in, I think it was 3.5% versus expectation of 2.7 or 2.8. I'm going off memory. Either way, those are hot numbers. And what I suspect is it will instantly, and going forward, continue to change the dot plot, the trajectory of expected rate hikes. We were looking at we had coming into the year expected at least one more rate hike in 2019. That went to the futures pricing in the next thing being a rate cut. Well, that's going to change now, and I can tell you, I'm just suspecting that Jerome Powell, everybody pegs him as Trump's, we'll call it Trump's witch, some word that rhymes with that. And he backed off, I think, because he saw what was going on in the fourth quarter. Stocks getting pummeled, the market throwing a hissy fit, and everyone's saying that he's cowed down to Trump. I'm sure he resents that. I'm sure the Fed resents that, the political pressure from D.C., which is unprecedented. This is the first time in history that the White House has pressured the Fed and tried to, jawbone them into which way they go. So all I'm getting at, and this is just suspicions, he's looking for probably a reason to hike rates and put the brake on the stock market bubble. And hot GDP numbers like this, it certainly doesn't help support the case for the next move being a rate cut that was priced in. So where I'm going with that, all this should be, and it's not immediately being reflected in, but it should be bearish for the U.S. dollar, bullish for the euro. It's at some point we were at that Goldilocks type scenario where rates were low, Fed was going to keep it low, economy was growing, But if things pick up quickly, you're going to hear talks again of another rate hike, and that's it. Well, so we'll leave it here. And again, that's me just fundamental ramblings. I can tell you this is technical, and this is what I'm watching. And so if we see the euro US dollar move back up and break out above this falling wedge pattern and that 113-ish level there, that would be quite bullish for the euro, meaning bearish for the dollar and bullish for gold. So I'm very much still watching this. That's the daily chart of the euro US dollar. This is what it looks like on the weekly chart. You can see these weekly divergent highs and lows, and they work. It's nothing guaranteed. They're not buy or sell signals in themselves. Here's negative divergence at that high. You can see what happens at divergent high, correction. Here's a divergent low, rally. Here's a divergent high, correction. I mean, it's wash, rinse, repeat. It's not confirmed. We need to turn it up here. Maybe we find support here at this 112-ish, 111, 240-ish level. Maybe we come on down here. Maybe we continue to go down. That's the thing, guys. You know, a trend is a trend until and unless it's reversed. And right now, there's no evidence of reversal. But we'll watch for it here. We'll look for a breakout of this downtrend line. Might be able to modify that up a little bit. And again, that all leads in. I'm not a big Forex trader. I know some people on the side are, and I'll be glad. And somebody asked, and I'll do this as soon as I get a chance, to go over some of the other pairs like the yen, the dollar yen, the I'll go over the you know, the British pound and some other ones. But this is the long-term chart on gold. There's your bull market or bear market downtrend line that was taken out, breakout, back test of this big triangle pattern here. And so I'm still looking for a move to gold up here to about 130.05, awaiting the next buy signal. And then when that level breaks, boom, big run up here to about 151. And that would most likely coincide with weakness in the stock market. Not necessarily, but quite possibly. And then to zero down, here's gold. No divergence here, but we did fall, and I've talked about it for weeks now. And see, gold's been a dead money trade. That's why I'm out of it. It's an official trade, but I did say before, you can scale in. I like scaling in 122.40 down to this 120-ish level. 120 is a very good support level. If it happens to break, 117.40 is also a very good support level. And as I've said recently, silver looks better technically to me than gold. This is a very solid support level, about $14 right here. You can see it. We had this basing pattern right here, W-type pattern. We broke out and we're back testing it, and while we're back testing it from above, we have this nice clean wedge pattern with divergence on silver. So there's one that could pop if you're a silver futures trader, or this is the ETF SLV. Probably bring us all the way back up here at about 1527, and maybe more, because we have a long-term downtrend line. That's just near-term stuff there. Bigger term, we step out, look at a longer-term picture. Here's a downtrend line that could be taken out, and silver looks like it's bottoming here, just like it bottomed back here. We had a little basing action, and then boom, it exploded. So just be ready if these things happen. And again, watch the dollar. If the dollar doesn't reverse trend, it's doubtful you're going to see this big runs in silver and gold. But I think it's all the potential is there right now. All right, let me wrap this up. Make sure I covered everything I wanted to. That's it. That's it on the main things. Treasury bonds, bullish. Gold and silver, kind of a waiting. Maybe not a bad time to start nibbling in, start scaling. But remember, they could be dead money trades for a while. They don't pay dividends. And I've got price alerts going off like crazy on some other monitors. So I'm going to wrap this video up here and start trading. Alrighty, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.